Hello, what's up, traders? Welcome once again. This is Greatness speaking. In today's video, we are going to be talking a bit about risk management. Risk management is not much of a broad topic, but it's a very important topic when it comes to trading. Risk management has to do with, protecting your capital first before protecting or going for profit. And there are several ways to practice this risk management of a thing. I will be stating few, even though I will not be going so deep here because it's not something that is so deep. When I mean so deep is that I won't be spending so much time talking about it. So I will just tell you some of the important things you need. One is that before you take a decision before you take any trade, you first of all have to be aware of the risk, the amount you are willing to risk for that trade. And you see, one thing you have to do first of all is that you must go for high probability trades that have enough confluences. Let's say for example, the 1 hour does something like this. Let's say this is the 1 hour demand area where the market is supposed to go up, and you move over to the 15 minutes, you are seeing something like this. Now, this is the same thing as the 1 hour, but the fractal nature of the market, it's not always, it does not do the same thing in every time frame. The market is showing you the same thing in different ways. Okay, here is it. Now, this is the same zone you are looking to buy on the 1 hour time frame, and the 15 minutes time frame, you are seeing the same thing as this. Now, this looks complex and you might be confused. This is a downtrend, this or that. But because it's a confluence with the 1 hour demand zone, this might be a high probability trade. And because maybe you have one other confluence like the Fibonacci, and maybe taking it from the, let's say, high, from the low to the high, and your goal is to take trades from 0.886 area, the market is currently in such area, that's another confluence. Or you have your trend line confluence, something as this. Just an example, I'm not saying it's a trading strategy. Whatever it is, you might have a trend line confluence. Okay, since this trade has broken this trend line, I will only take a buy if it break above it and retest it. That's when I'm willing to buy. That's another confluence. Or whatever confluence you might have, it might be indicator confluence. It is also good, and there is a high probability trade. As far 1, 2, 3 things agree to one trade, then that's a high probability trade. One way of practicing risk management is first of all going for trades that have high probability of playing out, and secondly going for good risk to reward. The fact that you are willing to risk a certain amount, then the reward should be more than that amount you are willing to risk. If I'm willing to risk $10 per trade, I should be making $30 if it goes in my favor. If I'm willing to lose $100 per trade, I should make $300 or more when it goes in my favor. If I'm willing to risk $1,000, I should make $3,000 and above when it goes in my favor. That means the risk to reward you should be taking should be a minimum of 1 to 3. This is 1-to-1 risk to reward. You can say this is a dangerous trade. How will you be risking $10 to make $10? Or how will you be risking $10 to make $20? It should be a minimum of 1 to 3 risk to reward. This is a 1 to 3 right now. You are risking 1% to get 3%. I usually take a minimum of, right now, 1 to 10, but I've reduced it to 1 to 5 already, so that I won't, because of high risk to reward, I'll be missing some trades. So whatever amount I'm risking If it goes in my favor, I'll be making times 5 of that amount. Remember, this is a game of probability where you are either right or wrong. You don't own the market, but whenever you are right, you should be making something good. And whenever you are wrong, you should lose something little. That's part of risk management. Another important part of risk management is putting your stop loss in place. Your stop loss it's not just a part, it is one of the most important things in trading. One of the most important things in trading, stop loss, not take profit, stop loss. The stop loss is very important, and you shouldn't consider taking a trade without your stop loss being in place. Excuse me. Take water. So like I was saying, you shouldn't consider taking any trade when your stop loss is not in place. And your stop loss, it doesn't matter how many pips it is, depends on your trading strategy. If it is like this, if this is your stop loss, then this is a 1 to 2 weeks reward. If I'm to be here, I won't take this trade. Any trade that is not giving me a minimum of 1 to 5, I don't take it. I don't take it. But I started with 1 to 3. Any trade that is not giving me a minimum of 1 to 3, I don't take it. As the moment I started growing, learning more things, learning from the market, I now see a reason to go for a minimum of 1 to 5. So your stop loss should always be in place. And finally, your choice of lot size. Now, according to what I was taught while I was starting, which I also used the date, which is the best way to trade, no matter what the capital is. Don't risk more than 0.5 to 2%. I don't do up to 2% percentage, but I'm just saying this because I was taught this way. Never risk more than 0.5 to 2% of your account. So now you are using 0.5% to trade, or you are using 1%. When I see the trade does not have a high probability of playing out, I use 0.5. When I see it's okay for me to go with, I use 1. I've never gone beyond 1. Not total risk. Total risk you shouldn't risk. Total risk you shouldn't use on your account is 5%. This one I wrote here is per trade. That means if you are using 1% and you're taking and you want to risk a total of 5%, you should take maximum of 5 trades. If you are risking 0.5%, you should take a maximum of what? 10 trades. So I don't expose my account to a risk that is more than 5%, and I don't take trades using more than 1% per trade. Like this trade here right now, I risk just 1% on it. The same with here. So if I see the trade, maybe the stop loss is somewhere here, and this is the 1 to 3. Let's just say I want to risk this. I'll use 0.5 because the stop loss is kind of huge to me. You get. So you should consider, first of all, after getting your stop loss, how much am I willing to risk? Then finally, how to choose your loss size, your choice of loss size. Your choice of loss size. It's a very important topic, and it's a very important aspect when it comes to executing a trade. You should be aware of how much you will lose when it goes against you. You know how much per pips. You know, we have a lot of third-party apps that have helped us to work on this. Instead of you to start calculating, okay, this is let's say for example a 20 pips stop loss. This is a 20 pips stop loss, for example, and I want to take this trade. Now, which loss size do I use? Because I want to risk just 1% of my account. You start calculating, doing all sort of manual works. We now have third-party apps that help us to do all of these jobs, like Forex Calculator, Facebook Forex Calculator. There are so many. They are on Play Store. But while I'm making this video is to show you how you can do the same thing here on TradingView without leaving this platform. There are a lot of third-party apps which I was using before now, and I usually get caught up. Sometimes I want to do scalps, I I want to trade on the 1 minute, 5 minutes, or even down to the 30 seconds. Before running to choose lot, see, there are two ways for you to choose lot. It's either you use a uniform lot, for every trade use the same lot size, or you calculate how much you will be risking per trade. Now, instead of doing all the manual works or using third-party apps, before you go to my forex book calculator, then you now move to MT4 to go and execute your trade. Then you come to TradingView to get your stop loss in pips, to get your take profit, all of those stress. Instead of doing all of those things, you can do the same thing inside TradingView here. Get your stop loss, get how much you'll be losing, get the loss size you'll be using. All you do is open your MT4, sit down your TradingView, and execute your trades using this tool. So the tool is an indicator that works just like every other third-party app. I've tested it, I have used it, and it works the same way. Now, the name of the indicator, this is a forex size calculator and simple loss size calculator. I'll be showing you these two. I prefer one of the two, but I'll be showing you these two in case you choose to use one of them. Okay, the one I like might not be the one you like. I prefer this one. But you might not prefer this one, you might prefer the other. The reason I chose this one is it allows you to change currency, the currency you are using. If you are not using USD, you are using pounds or whatever, it allows you to change that. It allows you to see the balance. It allows you to see how many percent you are risking. It allows you to see how much you will lose if it hits your stop loss. It allows you to see the pips, and it allows you to see the lot size to use. The other one shows you just your lot size. I would get there. So let's say I have $1,000 and I want to risk 1% of $1,000, which is $10. And I want to, let's say my stop loss in pips is 10 pips. 10 pips, but I don't know which lot size to use. I want to use a lot size that if it hits my stop loss, I will lose just $10. Even if my stop loss is 5 pips, even if it's 100 pips, even if it's 35 pips, even if whatever amount of pips it is, I want to have a lot size that whenever it hits my stop loss, whether more than 10, 20, 30, I will still lose just $10. So all you do is go to the indicator setting, see the setting button. Here's the indicator here. See this setting, you just go close to it, you see the setting button, click on it and go to input. Now I want to use USD, you change it to USD. Now account size $1,000. Then how much do you want to risk on this $1,000? I want to risk 1%. How many pips stop loss? Let's start with 10 pips stop loss. Then calculate the loss size for us. See your account currency, see your account balance, you are risking 1%. If it goes against you, you are losing $10. That's why you have this 10 here. Pips at risk, 10 pips. Loss size, 0.1 loss size. So this is very fine. Now let's assume we won't change any other thing, we'll just change the pips. Let's say we now have 15 pips stop loss. Calculate how much are we going to lose if it goes against us. $1,000 our account balance, 1% risk, we'll lose say $10, but we have 15 pips stop loss, and it's recommended we use 0.07. Let's even go for a worse scenario of having 50 pips and we still want to lose just $10 if it goes against us. So you can see it recommends 0.02 for us. If it's go against us, we'll still lose just this $10, risking 1%. Now, if you decide to increase your risk to 2%, that is your choice. Let's even go for a lower pips. Let's say our pips is 5 pips. How much are we to lose if we go against us? Same $10, but our risk is 0.5. If you use third-party apps like my forex book calculator or any forex calculator, you will get exact same thing. Instead of going there, you can just use this. Now let's use another indicator. It's called simple forex lot. You can see it's below here. Let me take this off. Sorry. Trying to clear that off. You can see it's below here. You can reduce it, and you can flip it to the upside if you want. If I want it to be at the top, I'll just flip it to the top, and here is it at the top. Then I will reduce it. Now it's showing you just lot size here. It's not showing you your account, but you have all you do if you want to use it. You go to the setting of the indicator, and you have opportunity to choose an account size, but the balance is only in USD. It's not like the other one that give you opportunity to change your balance to pounds or any currency you want. Now let's use the same $1,000. How much are we risking? 1%. How many pips is your stop loss? Yes, let's start with 10, like the first one. The same loss size the first one gave to us. Let's go for a 15 pip stop loss. That gave 0.07. Okay, you see the same thing we have here. Now let's go for 50 pips stop loss. That one gave us 0.02. So let's go for 50 pips and see if we get the same thing. 0.02. So let's go for 5 pip. That other one gave us 0.2. Let's see what this will give to us. 0.2. You see it now. So it only shows you the loss size. If you want to see your account balance and the rest, this is where you see it. But it's not showing you how much you will lose if it go against you. So that is why I prefer this one. It will show you both the amount you will lose, the percentage in risk, the balance, the currency, the base currency, and the loss size, which you can also change the base currency if you want. If you want it to be in Euro, Australian dollars, AED, New Zealand dollars, Great British pounds, Japanese yen, Canadian dollars, and CHF, Swiss francs. So whichever one you want to put it, let's see Euro. So that is all I want to talk about for now. How you can use this tool or trading view and indicator to do all your calculations instead of leaving here and moving over to third-party apps to go and check how much you will lose. You can do all of the calculations here. First of all you have to do is first of all, after seeing a setup like this, let me just use this as a scenario. After seeing a setup like this, impulse, correction, impulse, break of structure, sweep of liquidity, correction, and here is your demand. You want to take a buy here. Now you have seen confluences and you want to take a buy here, and you're like, okay, before I take a buy here, what's the first thing I will consider? Where would be my take profit? How many risks to reward will this thing give me? Let's say here is my take profit, for example. Then with your position tool, risks to reward, this is 1 to 10 risks to reward. It's worth taking. If I lose 1%, if it goes against me, I lose 1%. If it goes in my favor, I make 10%. This is worth taking. Then the next thing you consider is, okay, let me 1 to 12 instead. Okay, the next thing you consider is, okay, which loss size do I use? How many pip stop loss? Which loss size do I use? How much am I willing to risk for this trade? Your loss size depends on the pips and stop loss. If you are using the Forex calculator that we just checked, so I'll be willing to risk. Let me risk, since I'm getting, let's say 10%, I'm willing to risk $100 to get $1,000. I'm willing to risk $10 to get $100. I'm willing to risk $1,000 to get $10,000, since it's times 10 of it. So which risk am I placing here? I want to lose just $10. So I'll move over to my calculator. The amount you are risking also depends on your account balance. If your account balance is $1,000, 1% of your account balance is $10. If your account balance is $10,000, 1% of $10,000 is $100. If your account balance is $100,000, 1% is $1,000. So it depends your account balance. Your account balance is $100, 1% is $1. So you'll be like, okay, I'm willing to risk 1% of my account of $1,000, which is $10. And if it goes in my favor, I will make $100. So then you can now calculate your stop loss in pips. How many pips do I have here? You do it like this. It's okay, this is 20 pips. Okay, if it goes in your favor, how many pips? 272 pips. So you've seen your pips now, 20 pips. Go back to your forex calculator, you impute it there. Okay. My account, let's just say my account is $10,000. Let me put it that way. And I'm taking 1% risk. I'm taking 20 pips stop loss. Okay. That means I want to risk just $100, but I don't know which lot size to use. You can see it's giving me 0.5. If it goes in my favor, if it goes against me, I lose $100. If it goes in my favor, I make times 10 of this, which is $1,000, just from here to here. If my stop loss in pips is like this, let's check how many pips. 13 pips. I come over here, I change here to 13, and I will still risk just $100, but this time the lot size has changed. Let's even reduce the stop loss the way it ought to be. That's 11 pips without refinement. 11. We have 0.9, 11 pips, and we are still risking same $100. So this is basically how, not just to calculate your risk, but how to consistently become profitable if you follow this simple rule of risking not more than 5% of your account in all your trades, and not more than 1% per trade. So that's basically it for now. See you in the next video.